Hey guys, this is Julie. Good morning. Going to go over the empirical rule, which is a statistical method describing how a range is measured from the mean using 34%, 68, 95% rule. 68, 95, 99% rule is what it's called. But when you take half of that 68% and put it around the mean, the 68%, you get two 34s. So when you measure out from the mean going forward, 34%, 68%, 95% going from mean to 3. And that is what Jats PT does for you, right? So we can go from the mean to the 3 and then equal measurements of that precise distance with the Jats PT indicator for NinjaTrader. So this distance is going to be different every day, or it changes. And especially if you're doing calendar day plots, because calendar days change more than, say, a weekly or a monthly range, which is the set number of days in the month or the week, and that doesn't change during that time period. But if you're doing calendar days, let's say 7 days, 14 days, 30 days, it can change every single friggin' day. So you have to be careful measuring the means and the highs and lows on calendar days. More frequently on quarterly, monthly, weekly, yada, yada, yada. So when you break this down on a daily, weekly, monthly level, quarterly, that's when you can um, take this range and learn to rely on it. So I've got two end of the month levels, 298.25 points and 58.83, which is a 58.83 strike, and 61.81 minus 329.50, which is 58.51. So let me explain this. 68, 61.81.25 was the December high. And if you measure the JATS PT range for the monthly level, how many trade days were in the month of December? 298.25 points. If you measure calendar days in December, the range expands to 329.50. So we can go from 298.25 points to 329.50 points. So going from 58.83 to 58.51. And if you put, and here we can give you the levels for all the months, quarters, Globex, 1 hour IB, and similarly, I can do 30 day, 60 day, 90 day. I post those as well. So when you go from the 298 to the 329.50, let me pull up a chart and show you that from this December high, we were inside the monthly ones, and 298.25 for the monthly contract comes right down here. Look, right where that low is. The low actually went to the 30-day 2 and bounced. Um, and we went back and closed inside the ones again. You see that? So it was a false breakout. It did not continue. It went back inside the distribution, and it actually went from the lowest of the ones to the highest right in the middle of that range. But this was an upper 4 week one right here. So you can measure these ranges differently. So you can measure weeks, days, months, and calendar days. And these algos have learned to maximize the value of these time periods. So if they're selling premium, they're going to want to sell outside the highest and lowest of these time periods taken together. And when the level breaks, it'll go to the next level. Like it went from this one to the two and then came back in, but flushed down to the daily two and then back up. So this was a key reversal day back up, closed back inside the ones, actually came down and tested the lower 30-day one quite precisely and bounced back up. So, excuse me, we're still inside that 398.25 range. But as I showed you on the sheet here, excuse me, we can go down to 58, 51.75. So I need to draw another line on the chart because if we continue to move down over Monday and Tuesday before Tuesday closed, we can get down to 58.50 if we come back down. So if this price breaks at the 30-day one at 59.75, say 59.78, watch out because we could be retesting these lows. Otherwise, if we stay flat and small, they're going to be wanting to take their profits inside the one because they sell premium, and as long as it's inside the ones, they're happy. 6100 is blocked, pinned, but and 6105 has a lot of volume on it. But conversely, there's still plenty of room to go up in 2 days as well. It could, rally back to the high. Um, if we take 298.25 going from the low back up, you would expect for it to top out, around 61.65, potentially somewhere around there. But we have that second level, remember? We can go from the monthly days in the session to the 30-day. So we can go up 329.50. So if we move this up to 329.50, there's 330, there's 329.75. You can see we're right up here at this blue too. So 61.90, right? And that would clear the stops and give us a new high for the year. So we're within a point range of hitting, a year high. And, you know, wouldn't that blow everybody's mind? So I'm not sure which way we're going to go, but I can tell you where the edges are. And this is how you can use a tool like Quick Strike to come in and see these, end of period options. So here's the EWZ4. That's Tuesday's expiration. And if we look at 58.50, excuse me, that's up here. Here it is right here. You can see there's the high puts are sitting here. And 7,471. We had an additional 2964 just added. So it's building. It's building the base to hold that low. Right? So we just confirmed the low for the put. And if we go up here to 6190, Let's see what the options are for that. Okay, way up here, and not so many. So nobody thinks it's going to make rip a new high, right? And it could, but there's nobody there. I know the dealer's there, right? Because you can't see the dealer order flow. But the highest upside option is here at 6105 or at 6100, 7,937. But an additional 3882 came in at 6105 to reinforce. So there's 10,000 right there between, well, more than 10, 11, 12. So that's pretty strong to get through, which would suggest that you might, you know, take two looks at this lower put in case it starts getting challenged. But, we can say that they're right now back inside the ones where they get paid, if they didn't already move their risk. And there's a good chance that their risk was already moved because we're inside this bear bar. So there would be more chance for them to try to, challenge this going back down. 5,900, this lower 4 week one, would be the last line of defense for the bulls to keep their spreads inside the ones. So if we look back at our sheet at 5,900, up here, sorry, go back up. You can see it's got the most strikes. Look at that. 5,900, 4,502. Um, Before we get to 5950, 5950 has a lot too. What's 5950? That's down here. So I think the actual level would be here at 5,900. Maybe they have a bumper 5950 before it gets down here at 5,900. Okay. So they have a bumper before it hits 5,900 is what's going on. Blocking it, blocking this lower put from getting hit. So they're definitely wanting to keep this inside the range. And how can we tell, right? How can we tell if they're going to be keeping it inside the range or not? This is where the magic of Jats PT happens. Um, Here's my point spread between the open and the close. But if I run a 1 period on top of the 14, let me do that real quick. These are monthly levels. So you can see that the 1 period daily went up to the monthly 2 and tapped out at 236 points. Right here, this big bear bar. Right here, went to the monthly 2. You see the point range went to the monthly 2 also. And here we're below the monthly ones. Right here, you see it tapped out at the monthly 1, tapped out at the monthly 1. So you can't get a range breakout unless this one is above the one. So this one period has to be above the 14 period monthly. You see that? So that is a better than anything else that you're going to get with, volatility measurements, because we can tell you where the overbought oversold is, and learn to trade realized volatility with the 14 period distribution on multiple time frames. So here you had a perfect example of it, and where it stops out on these statistical levels. Go back and take another look at that real quick. Go over to the um, MIT News, look at Explain Sigma, and follow along what they do with using these probability distributions. And it's basically that simple on these different time frames. And our proprietary method measures these ranges. We think that incorporates proper market dynamics because we see it over and over and over again. When you're below the one, it's just going to be normal ranges. You're not going to be hitting for, long home runs or anything like that. You're just going to be trading the normal point range for the day, week, or month. When you break the range, that's when you get into the extensions, and that's where you get your big range expansion. And you can go for these outside levels. But otherwise, they're going to, just normal, options theory, like you would with your implied volatility, except you're using the realized volatility or historical. This yellow line is realized. That's the one current one period, what it's actually done on a daily, day-to-day basis as far as threshold. And, in relation to the higher time frame 1, 2, 3. Let me expand this out, maximize it. So Jats is just a tool for you to use to graph where you are inside this distribution. It does get up to the threes also. There you go. And beyond. Here's an example. Went up right up to the three and stopped. In fact, this was on the end of the December. Look at that, December 26th, Santa Rally. All right. And here we went down to the outside twos also. Um, went up here, stopped on the point range for the two, and here's the twos, these blues, where it basically stopped. Got a little bit of a variance into that three, and they were all over it, sending it back in. So, and here's a three coming back inside. So, um, we have placed ourselves in the middle of the ones practically, and it can go flat inside, this range 6100 to 5900 through Tuesday. It would be my guess, as long as this is below, at or below this one. If this breaks that one and we do get a downward, push because people are selling out at the end of the year, which could happen. People are trying to get out ahead of January, book their profits. we could see that push above this one, um, and come, if the point range breaks, 110, you're in this, what is the high level here? We can tell precisely. 118. So if it breaks 118 on a daily basis and starts running, so if you have a daily bar 118 or higher, it's moving down quickly, and you would want to, see these protections come in. The twos are down here right on the put wall. Look at that. They're right, the twos are right inside the put wall. So, 184 points, 184.75 points. So I hope this has helped. Here's 213 and 236. So you can go from the way I calculate 4 weeks, trading days in the session, and 30 days. So you can get three different levels to trade, which I think is very helpful. And maybe you could do a lot with that. But having, an indicator that plots these ranges, how the market makers and dealers actually use them, I think is very helpful. And I think we have a unique, you know, value to you for that reason. You can see here we were right in the middle of the weekly range. And then we have the quarterly also. So you can see that they've got it inside the quarterly range, which is another reason for them not to break this upper one. But if they do, you can see they went to the top quarterly. I think that's yeah, that is the quarterly. It's a 3 month one. A 90 day. See, there's so many lines. 90 day one um, held the high. And then here, the quarterly one held the second high. And we closed below it. So I was wondering if that 6069 was going to hold 12 week. Yeah, 12 week. Okay. That's so cool. Here is the quarterly one, the bottom one, 6069. There it is, 3 month. That's the number of trade days in the 3 months. So they're back inside that level, meaning they want to keep their spread, and not to mention that 6055 JGQX is applicable as well. So I think there's more downside risk than upside, is what I'm trying to say, and we'll see what happens. But going into the new year, January, everybody's expecting the market to just plummet for a while and to get a pullback. So know where these bottom levels are on the new monthly and quarterly that we'll be getting, and follow them in the Jats PT room, because that'll help you get prepared planning your spreads. And this is where I think the magic can come in for you selling premium, because we can keep you out of troubled waters with our levels. Certainly give you understandable levels. See, it didn't hit the yellow line up or down. Look at that. All right. Y'all have a great rest of your day, and we will chat at you next week. Bye.